Bill Schultheis, you are a financial planner and you are the author of this new book, the Coffeehouse Investor's Ground Rule: Save, Invest, and Plan for a Life of Wealth. Bill, welcome to the show.
Alan, thanks for having me. Appreciate it.
So, Bill, I'm going to start with a very strange question, and maybe you are being asked this question out of lately, but okay. So the elections are over. We have a new president. How should we place our portfolio now? Should we change everything? Because now, before it was a Republican portfolio, now it's a Democrat portfolio. That's number one. And number two, Pfizer just discovered the cure for coronavirus, the vaccine. Shouldn't I put at least half of my money in Pfizer? I mean, it's gonna sell, isn't it?
Oh gosh, we could talk for the next 2 hours on those two questions, Alan. I'll start at the beginning regarding how we should maybe look at readjusting our portfolios for the anticipation of a new administration. We don't know how the Congress is going to unfold with the two unknowns in Georgia right now. But maybe before answering that, I'll back up a second and share a little bit about the whole coffeehouse investor philosophies as
Perfect,
it
perfect.
relates to today. And it is meaningful to me because my book happened to come out at about the same time that this election occurred. And 22 years ago, I wrote my first book, The Coffeehouse Investor: How to Build Wealth, Ignore Wall Street, and Get On with Your Life. I thought there would be an enormous opportunity to share an investment philosophy of building wealth that was about 180 degrees different than what was unfolding in our society 22 years ago. 22 years ago, you mentioned that was about the same time you came to North America to begin your new journey and your new career. And that was about the same time that I began my new journey and my new career. And the whole philosophy of the coffeehouse investor, as you know, is ignore the markets, ignore what's going on out there. The three simple principles that I shared in my book are: don't put all your eggs in one basket, there's no such thing as a free lunch, and save for a rainy day. So when you integrate that into your own life, what that means is figure how much you need to be saving so that you can sustain a retirement with a meaningful life. If you're going to invest in the market, the simplest way to build a portfolio is to capture the market's entire return through low-cost index or passively managed funds. And then the third principle, don't put all your eggs in one basket. Divide your assets between baskets that reflect where you're at in your life, in your need and your ability to take risk. So that's a long-winded answer. The short of it is coffeehouse investors ignore what's going on out there in the marketplace. Not that they ignore what's going on in life, but as far as trying to fine-tune their portfolios, doesn't matter. Coffeehouse investors over the last 22 years, I think this is the fifth national election they've lived through, and those who have ignored it and who have stayed true to their goals and their objectives have come out ahead. Now, to answer your question about Pfizer, how much Pfizer should we have in our portfolio, or how much Amazon should we have in our portfolio? For coffeehouse investors, that answer is very, very simple. It's however much Pfizer makes up those index funds that you own. That's how much Pfizer you should have in your portfolio. Now, if you want to take 5% of your portfolio and put it into some high-flying stocks because you want to have fun, go for it. But as I said in my first book, it's not worth risking your entire portfolio to find out you aren't the next Warren Buffett. Now, we
Okay.
can get into this a little bit later, but there was a fantastic book written in 2000, about the same time that my book came out, called Creative Destruction. And the challenges of keeping up with the dynamics of change that these companies have. To stay one step ahead of it from an investing standpoint is just, you're fighting a losing battle.
Wow. Okay, Bill, let's go back to your past. You grew up in a farm. How do you end up being a financial planner? I mean, that's the farthest thing from your father and grandfather. You are in the fields of wheat, and all of a sudden, and it's already planted in your family, and you say, no, I would like to go into stocks. How did that happen?
Well, you're right, Alan. 2 weeks after I graduated from Texas A&M, I was working on the 25th floor of a high-rise in downtown Seattle, and that's a long ways from driving a combine in the wheat fields of the Palouse in the southeastern part of the state of Washington. That incidentally grows more wheat than any other nation in any other county in the nation. It's all dryland wheat. It's a beautiful part of the world. In fact, the National Geographic has eloquently described it as a paradise called the Palouse. I spent 2 years at Washington State University, and it was about 18 miles from my home, and I needed to get away. I needed to get out of Dodge. So I moved to Texas Texas. I spent 3 years at Texas A&M. I spent a year at Chicago working at the Chicago Board of Trade. And I didn't want to go back to the farm and work as a hired man for my dad. I had three younger brothers and one who still farms the farm, and I wanted to get on with my life. Now, I share the story behind the Coffeehouse Investor story in my new book, The Coffeehouse Investor's Ground Rules, which incidentally you can download a free chapter on my website, coffeehouseinvestor.com. The hard copy is going to be available at amazon.com in a couple of weeks. You can download or you can order it on Kindle right now. But the story behind the Coffeehouse Investor story was a desire to try to connect with my dad. I think, all kids, all boys want to have a good connection with their dad. And my dad, I knew that if I was going to connect with my dad, I was going to have to connect with what he was interested in, because he didn't really have a whole lot of interest in what I was interested in. And he was interested in the stock market. He was obsessed with trying to get rich in the stock market, to become the biggest farmer in the county. And he thought that his way to becoming the biggest and the best was to make lots of money in stocks. Now, the tragedy of that, Alan, was not that he failed miserably at getting rich in the stock market. The tragedy is that he had 4 sons and 4 daughters, and he never took his one time in all the years that I was out there. We lived on the most beautiful farm in the world on the banks of the Snake River Canyon. One time he took his sons fishing. He was always too busy trying to be the biggest and the best and not tune into his own sons to say, hey, I've got 4 great sons and I'm going to spend some time connecting with them. And that's the tragedy of the whole Coffeehouse Investor prior to writing the book. It was my pursuit of trying to make it big in Wall Street, and I didn't even really want to do that. And those are some of the things that I share in my new book.
Wow, that's so touching, Bill. I must tell you that my father died at 45 years old. He was always working, trying to make his family rich, and we never got to see him. And after he died, we were poor because he was leveraged to his ears, and so he didn't achieve wealth, and he didn't achieve to spend time with his family at all. I don't remember my father because he was never there. So
Yeah,
that's
very similar story. And it's been so gratifying to have received emails over the last 20 years from fathers and mothers who have really said, hey, I connect with your investment. I connect with your philosophy. I'm not spending as much time in the stock market. I'm spending more time with my children. I'm giving a copy of your book to them so that they can get their act together and their desire to build long-term wealth, not only financially, but emotionally, spiritually, health-wise. It's really, really been a gratifying journey.
Well, I just gonna just share a little bit more with you. I was a day trader for 10 years, Bill, and I was stressed every day. And one day I had a horrible week, and I did all my calculations, and I discovered that in 10 years I never did better than the index. So, so
Well,
I
it's
wasted
interesting. And I appreciate you sharing that story, Alan, because there's lots of different ways to look at the stock market. I mean, my dad continued to be obsessed with the stock market until he died about 3 years ago. And for folks who want to be obsessed with the stock market, more power to you. If you want to have fun that way, if that's the way you enjoy spending your time, I'm not going to try to convince you otherwise. My goal in creating the Coffeehouse Investor 22 years ago and then seeing it in action over the past 20 years is that there's a huge part of our population that doesn't want to have anything to do with the stock market. They got better things to do with their lives. And when I look at my audience on who I wrote the Coffeehouse Investor for, I start with my 7 brothers and sisters, and now their children, and now their children's children. These are people that are doing great things with their lives. They're just, it's so inspiring to see what they're doing and to see that the way that they are pursuing their dreams and their passions. And they all have something in common. They all need to be responsible for making sure that they save enough money and invest it wisely so that they can live a lifestyle in retirement similar to the one that they have grown into while they're working. And some of those dollars are likely going to be placed in the stock market, especially now when you can't get anything on CDs and bonds. I mean, they're barely paying 1%. To have a meaningful portfolio 10, 20 years down the road, investing some of your dollars in the stock market is probably a risk worth taking. My book and my message and the Coffeehouse Investor philosophy is directed towards people like that who want to get on with their life and want to do the right thing with their money. And they don't want to get caught up in following the stock market and watching what it's done and tuning into Wall Street saying, hey, this is how you should adjust your portfolio based on what's gone on in the elections. They got better things to do with their time than do that.
Right. Okay, Bill, I'd like to go back to your story. So you decided to uh, go and work in the stock market. So you went to work for what is now Morgan Stanley, right? What kind of work do you do, and then what happened?
So right out of college, I got a job with Smith Barney, which is now Morgan Stanley in Seattle. And I started out cold calling. This was in 1983. And that's how people built their business, mainly through cold calling and trying to develop a clientele that way. And back then, it was all about buying and selling stocks and the commission that you generated for the firm. The firm, they didn't care how you did for your clients. They were solely concerned about the commissions you generated. I mean, that's just the way it was back then. And to a certain degree, it continues that way today. But I found that I was just not successful selling stocks. I just couldn't do it. But I found a pretty good niche in selling tax-free bonds to clients. I would call people up and I'd say, hey, this is Bill. I've got some great AA rated bonds from the state of Washington. And do you want any? And back then, these were pretty good yields of 6, 7, and 8% tax-free. And the clients that I got, they didn't want to have anything to do with the stock market. They wanted that secure stream of income in their portfolios. And so I developed a pretty good clientele all across the nation of people who bought tax-free bonds. That's all they did. But deep down inside, I knew that I didn't want to be a municipal bond salesman the rest of my life. And after doing that for about 10 years, I said I'd had enough. It was kind of the decision to move on from Smith Barney was kind of led by my association with an organization called Hospice. I became involved with an entity called Hospice of Seattle. A friend of mine encouraged me to get along or to join. And in connecting with these people who were embracing this last final chapter of their life called death in such a vibrant way, it kind of inspired me to say, hey, I've got one life to live and let's get on with it. And so that really challenged me to change careers. But I changed careers. I had no idea what I wanted to do. This was back in 1993. I just said, I'm just going to leave it out there. And I decided I'm going to go dig in the dirt and daydream and climb mountains and play golf. And out of that came an enormous desire to write my first book, The Coffeehouse Investor. I just felt like there would be a tremendous opportunity to share in a simple way an investment philosophy that was starting to unfold across the landscape. It was led by Burton Malkiel's book, A Random Walk Down Wall Street, and John Bogle's work at Vanguard. And everyone today, that's the default choice they have in their 401k plans. But 25 years ago, I would say that 9 out of 10 investors had no idea what an index fund was.
Okay, so you were already promoting index fund 22 years ago when it was still a new idea and practically unknown to most people.
Exactly. And I felt like, well, I want to, the best way to do it would be to write a simple book, which is a whole nother story in itself. I share a little bit about that in my new book, The Coffeehouse Investor. And in the process of getting the book published, and it was a wonderful journey in getting the book published. I worked with the same editor and the same publisher who put together the book, The Millionaire Next Door, which has been one of the top selling financial books over the last 50 years. It's a simple book. It's the millionaires of the world are the people who save more than they spend, and they probably live next door and they've got a successful business and they work 6 hour day or 6 days a week. And in the process of trying to get some publicity for my book, I connected with an individual who happened to be on the same board as I did for Hospice of Seattle that said, hey, take it to the editor of one of the local newspapers. He might write a book review. And so I did, and that editor said, hey, Bill, why don't you write your own book review in our newspaper? And so I wrote my own book review in the newspaper, and I said, hey, if you ever want another column or another article, I'll do it. And he said, send me one next week. And so that turned into a weekly column that ran for 8 years. In fact, I
Wow.
outlasted the paper. 8 years after writing it, the paper shut down. But I said the same thing every week, Alan. I said, save more than you spend. Allocate your assets depending on your need and your ability to take risk that reflects your financial plan. And if you're going to invest in the stock market, just capture the entire market's return. Capture the long-term productivity of human beings. Don't try to cherry pick the hot stocks of the moment, because it might work for a day or a week or a month, but over a lifetime of investing, you're almost assuredly going to significantly underperform the benchmark average. Just
Okay,
doesn't make any sense.
okay, and that makes sense now in the year 2020, but in the year 1998, uh, when you were promoting the idea of index fund, just catch the average return. The average investor, the average American, they don't want to be average. Everyone wants to be above average. So I think that idea was difficult to sell, that you could just get the average return of the market and be happy.
Well, you're right. And even Wall Street today criticizes that whole concept of average. They're saying, hey, why accept average? If you do your research, you can do better than average. But back then in 1997, 1998, when I was writing the book and trying to get it published, people didn't want index funds. They wanted the dot-com stocks of Cisco and Microsoft and Intel. And it was just, that was when online trading started to take hold across the nation, and people were getting rich overnight. And it all came to a screeching halt when those high-flying dot-com tech stocks crashed and burned in 2000, 2001, 2002, at about the same time that I was writing my column. And so I wasn't getting paid a penny to write my column, but the editor allowed me to hold a seminar, to advertise a seminar. And so I advertised the seminar on, hey, if you want to embrace this into your portfolios and your lives, come to the seminar and we'll talk about it. And I rented a room at the local library, and it was absolutely packed. It was jam-packed with people who were saying, hey, I want to live a richer life. I'm not wanting to tune into the stock market. I got better things to do with my time. And out of that came the RIA business that I'm now a part of. We have a crew of 11 here, right? It's outside of Seattle. We manage about $800 million, and it continues to be just an incredible journey. And the most incredible part of this journey over the last 22 years has been the impact that these three principles have had on people's lives, including mine. People who want to get on with their life, who want to do the right thing, who don't want to tune into Wall Street every day. And it's inherent in all of us, these principles of don't put all your eggs in one basket. There's no such thing as a free lunch, and save for a rainy day. Those are the three principles that I continue to talk about. And I've got lots of stories in my book about the impact that it's had on people's lives. And it's going to be even more important over the next 20 years than the last 30 years, in part because CDs and bonds are not paying anything. Try making your financial plan work with a 1% rate of return over 20 years. You got to save a ton of money
Right.
compared to a more diversified portfolio that's likely to capture some higher returns than 1%. I mean, what's the dividend on the S&P 500 right now? I think it's almost 2.5%. So right there, you're doubling the returns of the 10-year treasury.
Right. Okay. So, Bill, there is you, and there are a few other authors who are promoting the same idea, passive investing. You just invest and wait. However, you are competing against a multi-billion-dollar industry that is promoting everyday cryptocurrency, Teslas, cannabis stocks, and we have all our sensors are saturated with all this information. So, do you have any tips on how we can tune out Wall Street? Because, they have a lot of money and they are fighting for our attention every minute of the day.
Well, it's so interesting to see what's unfolding in that space, Alan, because you look at some of these major financial firms, they're lowering their commissions to zero. They're giving you online apps to basically gamble as you please with Wall Street as the gambling
House.
entity. But at the same time, some of these financial industries are recognizing the wisdom of a coffeehouse investor type approach, philosophy, because they're reducing the costs of index funds to zero, and they're driving that cost down all across the board. And what the consumer is saying is there is no value in picking stocks.
Mm.
There is nothing. And you've got these same financial institutions like the Vanguards, the Fidelities, the Schwabs, even the Morgan Stanleys. They're creating these platforms to help you in your financial planning. So these institutions are doing what coffeehouse investors have been doing the past 20 years, and that's focusing on the financial plan and ignoring the stock market. Now, with that said, you bring up some point of Tesla and Bitcoin and cryptocurrency, and I think it goes back to, hey, if you want to, first of all, if you want to put 3% of your portfolio in it, it's not going to make any difference in your life. So go put 2% in cryptocurrency if you want to. You'll find out that it's a losing battle. But here's the thing that I want to stress is take your mental energy, take your gifts that you want to share with the world and put it to something good. Don't waste time trying to trade cryptocurrency. Do what you did, do what I did, create something that has value to people. If you really want to build wealth, if you really want to get rich, look at what the world needs and address that. That's the best way to get rich. I see it in my own life, in the pursuits that I've had. And it's just, I think it's a story that needs to be told to our youth who want to build wealth, not only, financial, but emotional wealth. There's never been a greater time to go out there and present ideas. I have a good friend, and she decided that she wanted to make soap, and she was all nervous about making soap and who's going to buy the soap. And she said, hey, I'm going to present my soap to an outdoor craft festival because of the social distancing, and she was nervous as if anyone was going to buy her soap, and so within 10 minutes of this arts festival, her soap had flown off the shelves because people love her soap. Now she's scrambling to build up her. Those are the type of opportunities. And one thing that I think is fantastic is, and it's really important to remember, is that these, if you want to build something, it's not going to happen overnight. Look at your story, look at my story, look at the stories of everyone else. It happens over time. It happens incrementally. And that's, I think, something that's really important for all of us to remember. It's the same thing in building wealth. If you're going to work at a company that's got a retirement plan, you're going to build fantastic wealth over a lifetime of investing if you tune into those things that you can control and ignore all the get rich quick schemes that Wall Street is trying to throw at you.
How do you come up with the brand, the Coffeehouse Investor? That's a fantastic brand.
Well, when I was creating my first book, I connected with a bunch of friends on Saturday mornings in a little coffee shop in Seattle, and we would connect there before we went out on our Saturdays to do whatever we needed to do, whether it was coach kids soccer or climb mountains. And I started sharing what I was working on, the book that I was writing, and these people started to connect with it. And pretty soon they started saying, hey, Bill, can you help me integrate this into my 401k plan? And so out of that came, well, I'm just going to call it the Coffeehouse Investor. And I think it really fits the whole message of people who want to get on with their lives and recognize that there's more important things to life than trying to get rich trading Bitcoins.
Well, the only problem that I see is that you don't seem to be passionate enough about this subject.
Well, I appreciate you saying that. I'm obsessed with getting the message out. I'm not obsessed with trying to convince people that this is the way to do it, because if somebody wants to trade stocks, more power to them. I was willing to bet when I wrote my first book that there were enough people out there that wanted to do the right thing, that I was just going to let the energy of the universe take it where it may. And it has continued to be an incredible journey. But there continues to be an enormous challenge out there, an enormous opportunity for all of us to change people's lives, one investor at a time. I reference two books in my new book, The Coffeehouse Investor. The first book that I reference is a book called Factfulness by Hans Rosling. And his message is that, unfortunately, he died a couple years ago, but his message was that the world, it's a very messy place, but it's getting better. Incrementally, people's lives are getting better. And that's what I'm encouraging and challenging people to tune into. Now, here's another challenge, is that we inherently in our DNA, we want more. You know, whether it's our hoarding mentality because deep inside we don't want to starve next winter, we want more. When we have essentially everything we've got, how do we continue to fulfill that desire for more so that it's not just more empty consumption, but really a gratifying, fulfilling pursuit of more community, more better ideas to tune into the aging population? I mean, you could just go on and on and on. That's the first book. The second book that I reference is a book that was just published early this year called Fewer, Richer, Greener by Lawrence Siegel. Same concept, same philosophy. You know, there's just an enormous opportunity out there to touch the lives of our neighbors, our communities, our own selves. And we do two things. We make the world a better place, but second of all, it's more fulfilling. Right. And it's just been an incredible journey the last 22 years. And I feel like I'm just getting started, because my goal is for when I'm on an airplane in 2 or 3 years and the market's dropping 2,000 points, somebody will say, you know what? Doesn't matter to me. I'm a coffeehouse investor.
Right, right. Talking about your message of turning one investor at a time, you have a YouTube channel, you have a podcast, you have your books. So I guess you're doing your first share of sharing the message.
Well, I am, and I look at what you're doing with your mission and your desire to help people and expose those who are having a positive impact in the world. And I'm inspired by people who are doing that. So it's fun to connect with people. I mean, this whole social media thing is kind of new to me. So I'm trying to reach out and get some expertise from lots of people who are a lot younger than I am. 22 years ago, the internet was just kind of getting going, 25 years ago. And I thought, gosh, I need to somehow get my whole coffeehouse thing onto the internet. So I took a class on how to build your own website using Microsoft's front page software. And I built my own website, and I probably had one of the first financial blogs out there because I was posting my weekly column. And here it is 22 years later, and I'm still trying to get the message out there. Wow. And the thing that inspires me, I mean, I got an email from somebody yesterday saying, hey, I've got 3 granddaughters. I'm 81 years old. I've got 3 granddaughters. I'm trying to help them see the wisdom of the coffeehouse investor. And I've just labeled it. You know, you can call it whatever you want. Bogleheads. You can call, you talk about the FIRE movement. It's people being responsible for their own financial future and taking the whole following stock market equation out of it.
Right, right. Okay, Bill, my last question is please tell the listeners and viewers one more time the name of your book, although you have said that a few times already, and where can they follow you in case they want to find out not only about your services, but about Bill, the person.
So, I walked into the office this morning and I saw a big book on my chair. And so this is the first time I've had a chance to have my book in my hands. And so that's pretty exciting. It's called The Coffeehouse Investor's Ground Rules: Save, Invest, and Plan for a Life of Wealth and Happiness. It's published by John Wiley. You can find out more information on my website, coffeehouseinvestor.com. I've got a YouTube channel. You can subscribe to my newsletter that comes out weekly. And what it is, it's brief bursts of inspiration to help you get on with your life and pursue what's important to you in your mission to not only touch the world, but live a richer life. That's something that we all want.
Bill, thank you so much for your time.
Thanks, Alan.